We're back. It's time for another Ticks and Trades market recap, a futures trading recap for Friday, February 21, coming at you the next day, Saturday the 22nd. So they fell on Friday. How do we know that was a good possibility? You may recall in Thursday's recap video, we talked about something going on with the hourly chart. So this is the last candle of Thursday. In fact, I'll just play that section of the video from last night so we can get our bearings. On this 60-minute chart, this hourly chart, there's a breakdown candle the first hour of the day. Price climbed up inside the body of this candle. So several things are in play tomorrow, or could be in play. If price gets up to the bottom of this trend line and the bulls can't defend it very well, this has the potential of playing to the downside. The bears could push the price down farther. Just depends on what happens, because this trend line's been important and they have to get above it. But all day long they were below it, so currently it doesn't look too good for the bulls. So sure enough, the bears were pretty strong. They never even made it up to the trend line, and that was one of the levels to trade against on Friday. And in the extended trading hours, they went a little higher before they dropped. They were on their way down when they opened. This was a sign in the big picture, at least, that the bulls were having trouble getting back to the trend line and definitely couldn't get above it. So we had some clues on Thursday that it was likely the bears could push price down, and they did. So back to the daily chart, where does this put us? Well, this would be a reversal candle. So many times when there's a reversal candle like this, not always, but many times, like this most recent one here, you can see that it changes the tone of the market for a while. So in this case, the high was like 606.40 or so. When they got near the top of this candle, they broke down. They finally got above it. So I'm just going to put a kind of hover here. So when they got above this 606.40 area, I'm kind of considering all this sort of a fake out, because we had this trend line that was important plenty of times. And so this most recent breakdown candle on Friday could mean a few things. It's also the end of the week. We'll take a look at the weekly chart in a minute. It could mean that the bears are going to come out in force. Notice the volume down here, pretty good high volume day, and drive price down farther. Or there could be retracements all the way back up, and they can attempt it again, and this could push price down even more. Because like the hourly chart we just saw, if that happens, this type of bearish consolidation has a tendency to drive price down farther below the low of the breakdown candle that starts that consolidation. So a weekly chart looks like this. So they could come back down, kind of bounce off this 20-period moving average, which they've been doing for quite a while now. That could be the reset the bulls need to drive price higher. And let's just take a look at the monthly chart, because we've done this a few times before. Remember this, call it 610 area? Where did that come from? It actually came from this Fibonacci price extension, 100%, essentially kind of a symmetrical move here. And this is the third month so far. It's just interesting they can't get above this 610 area. At 609.83 exactly, but they've been slightly around that or above that. And plus, we have another week before February closes. But this could just be kind of a sideways thing for longer before the bulls can move higher, or they might have a bigger reset. And I've been saying for a while, this is a long-term thing. It takes a lot of time for this to play out, but they could come down quite a bit more before they reset and bounce and go higher. So are we seeing the beginning of that? We're just going to call this like it is. We had a reversal candle on Friday, and this could set the stage for some interesting activity starting next week. Notice when you read through the game plan that I talked about the trend line, which is around 611.55 or so. It was kind of a range between that and maybe up to 611.80, that if they were below that, the bears were probably in control, especially if they started breaking below levels farther down, which is what I said here. In a normal market, if things aren't too crazy, you can get counter trend base hits at these levels. In a minute, we're going to look at how that happened based on the levels for the morning sent out 30 minutes before the opening bell. And this is what Friday's price action looks like in the SPY on a 1-minute chart. And this is the trend line, 611.55, thereabouts. So they were already below this. Keep in mind, in the pre-market, price was a little higher, but they couldn't get to the trend line. They opened on their way down, never went up to fill this little gap. Maybe I'll just zoom in a little bit so we can see this a little better. So they stalled out at 609.20, important level, but they couldn't do much. They went sideways for a while. So 945, here's the 945 candle. They closed at 609.23, 3 pennies above our level. Normally, you would buy to go long there. I'm not sure I would have. I didn't. I actually have a recording of this. I'll show you. But even if you had bought contracts in E-minis to go long, they did not make it up, like right at the market here. They did not make it up to give you 4 points. The high was just pennies away. High was 609.58, then 609.59. You needed 609.60 or thereabouts to get your 4 points in the E-minis. So that's a near miss of your profit objective. So it's giving you a chance to jump out at your break even or slightly above that if you want. And if you let it fall below this, you've already had some clues that if you waited for this close or this other close here, then you would just be giving money away unnecessarily. But anyway, per the rules, this is a buy long at the level, then jump out at your break even. When they came back down after not giving you, not once, but twice, your base hit. This was your chance to get 4 points, and they didn't give it to you. They came down to 607.45. They bounced. So you can take a counter trend trade there. Once again, we're treating each level the same. We're trading every single level. So our playing by the rules tracking log is consistent. So there's base hit number 1, at least 4 points. They got below it. You're not going to trade this on the long side again. They got below it. Here's a little bit of a heartbreaker. 605.70 with your 5-cent adjustment will be 605.75. And it looks like they hit it, but they didn't. They came within 2 pennies both times here. So that would not have triggered your E-mini trade unless you were just buying in the vicinity and just buying at the market when they were down there. So we can't count this, although that was a perfect bounce at that level. And by the way, same thing here. If you would have bought at 607.50, doesn't really matter. You would have still had that trade. So no trade here. That's a near miss of your trigger point. And then remember it was 607.45. We're going to enter a short trade for a trade on the opposite side, which is what I call a recycle trade over here at 607.40. Boom. So there's your second official base hit. So all through this time, I started recording right before they dropped here. I kept an eye on things, but I was busy working on something, had a meeting at 11. I was preparing for it. So I was gone from 11 to 12 or a little bit before 12. I got back. So here we go. It's 12 o'clock and they're coming back up. It's about right here. Coming back up into this. And normally I would not want to go short at a level that's been shorted already one time here. And then it hit it again. But there were other clues that told me that price was probably going lower. They were getting below some important areas. So I actually had a limit order to sell 2 contracts right about here. They missed it within like 2 or 3 points. They fell. So somewhere in the neighborhood of 12:30 or so, I just closed up shop and didn't get back to the screens until really today, Saturday. And the recording I have stops for some reason around 11:15. I was in that meeting and got back to my other computer and it showed that it was recording, but when I stopped it and then when I went to throw it into the editing software to speed it up, it just stopped at about 11:15 for some reason. So I'm just going to show you this recording. Nothing I did other than keep an eye on it. And I marked these levels dotted when they were satisfied or would have been satisfied. Like I didn't have an order trigger in the system. I could have probably, but like I said, I was busy with something. So this is all happening and I'm not even really doing anything with it. But I did want to go in with that short trade, but it didn't capture this. This stopped at about 11:17, 11:18 or so a.m. and nothing after this. So around 12 or so, I was hoping to go short here, and I wish I had. I would have just ridden this thing down. But, it's neither here nor there because I didn't have it. No trades taken for me. And 8 points if you were playing by the rules. And the tracking logs look like this. We got our 8 points back. First, level 3, wash, near miss of the profit objective. Got a base hit on level 2. They went down and didn't trigger this because of the near miss. That was a little bit of the heartbreaker. Back up, got a base on the recycle for the same level, so 8 points. And we're back up to where we were, right above 40% rate of return so far. My trades over here, the Sam's Trades output, Sam's Trades log. No trades taken for the day, and you can see where that puts me. So hopefully this is helpful to you guys. If you're watching these daily recap videos and I drop some hints and some clues, just my general thoughts of what the market did that day and what that might mean for the next day or the next week. And if you're receiving the levels and the game plan, it's essentially a narrative that should kind of give you an idea of where you're at. Like if I just go back to the daily chart and you see price down here, in the big picture, this is a very important trend line and they're below this or they're looking pretty weak. So, it's not too surprising that they couldn't muster, like the bulls could not muster enough strength to jump up here. And when price started getting below this, then that's your sign that the bears are in control and price is going to go lower. I said that in the morning. So ideally, with that information, if you're willing to take the risk, you could have bought put options on the SPY or sold a couple contracts at the end of Thursday or the beginning of Friday and just held them all day long because this was a bearish consolidation in the making and we called it here at the end of Thursday. A lot of different little tools you can use to gauge on the likely next direction the market's going to take, and I hope that's helpful to you. So back to the log, I'll just close out here. Thanks for watching. I appreciate the support. I'll talk to you again soon next week, the next recap. Have a great day.